You are listening to This Week in Bitcoin, the most important news in the Bitcoin world, delivered in just 15 minutes every Friday. This Week in Bitcoin is part of the Bitcoin.com podcast network. Learn about Bitcoin, create a wallet, and buy your first Satoshis, all at Bitcoin.com.
Hey there, this is Matt Aaron, your host of This Week in Bitcoin. Today we have a special episode, and it will be much longer than 15 minutes. It's a 2019 preview with 4 special guests. But before we start, I'd like to add a financial disclaimer. This is not investment advice. So why are we doing this episode in the first place? The crypto world moves incredibly fast, and sometimes it's easy to lose perspective amidst the never-ending news cycle. So I invited 4 people of different backgrounds, all experts in their respective fields within crypto. And we are going to reflect on 2017, the manic bull run, just a little bit, especially 2018 and the bear market. And for the rest of the show, we will look at what may be in store for 2019. Now, our guests have a shared vision on a lot of things, but they differ on others, which is great. I think respectful, intelligent discourse is something that the ecosystem as a whole has been lacking in the last 12 to 24 months. It's no spoiler alert to mention that they all want the crypto ecosystem to prosper in 2019 and beyond. And they will all share some ideas on how they see this growth playing out. We'll touch on stablecoins, the Bitcoin Cash and Bitcoin SV split, ICOs, and security tokens, among other subjects. Our first question is about building during a bear market, whether that's coding, business development, or investing. Before we hear the answers, here are the guests that are on the show today. First off, Roger Ver. You probably know him, investor and entrepreneur, owner and CEO of Bitcoin.com. He's invested in Shapeshift, Kraken, Ripple, Zcash, BitPay, and more. Vin Armani is a developer and entrepreneur. He has been in the Bitcoin space for some time, getting his first Bitcoins in Las Vegas for $15 each. Today, his main focus is on an impressive, albeit not very well-known startup called Cointext, which allows you to send and receive Bitcoin Cash without internet access or a smartphone, simply using SMS text messages. We also have Miko Matsumura, a venture capitalist. He has been in Silicon Valley for many years working with open source software. He is a partner at Gumi Crypto's venture fund, and also founder of the crypto exchange Evercoin. Finally, our youngest guest is Gabriel Cardona. I'll let Gabriel share his bio.
Hey, this is Gabriel Cardona from Bitcoin.com, creator of the Bitbox SDK.
Gabriel is, one of the leaders of developing things on top of the Bitcoin Cash protocol. And Gabriel, I think you've talked about this before, but obviously the energy of the year was a little bit different in the sense that 2017 was the manic bull run and 2018 things have cooled off. You continued to build, what are some keys to building during a bear market?
Yeah, I saw a really great quote the other day by one of the Winklevoss twins, and he said something along the lines of, in 2018, everybody wanted to be into crypto. In 2019, we'll find out who really wants to be into crypto.
I chose Gabriel's answer first because he started at the holistic level. The bear market and the BCH fork were tough times, and they are an opportunity to think about, what am I doing? Reevaluate why you got involved with crypto in the first place.
Myself personally, I kind of just took a step back and asked myself, what is it that I really love about Bitcoin Cash and cryptocurrency? Why do I do what I do? And really, at its essence, it's sort of just, I love Bitcoin Cash because of the problem it solves and how well it solves it. And, I have a really fresh story in that context. Recently, I was over in Beijing. And, when I first landed, of course, I go and I connect my phone to the Wi-Fi at the hotel. My computer. None of the websites that I use in my everyday life were working. So, I tried to log into Gmail, no good. Facebook and Twitter, no good. My bank, no good. Tried to send money over Venmo, no good. So, using Bitcoin Cash to be able to send money to people all around the world it refreshed in my mind how powerful the concept of peer-to-peer electronic cash, which is not backed by any central state, but instead just by computer science and mathematics is. I really want to make an impact with my life and my work. That's what drives me.
Gabriel also added the importance of managing money and risk responsibly, or it can interfere with your work.
So number one, you just don't want the value of the asset to completely crush, your inspiration for the potential of your work.
I then asked Vin Armani.
Well, I don't necessarily think that there's a huge difference between building in a bear market and a bull market, besides the fact that I think in a bear market, you're much more motivated to actually come up with a good product. In some ways, it whittles out and sort of, it streamlines the process, because when you're in a bull market, there are a lot of bad ideas. Well, there's a lot of bad ideas all the time, right? But in a bull market, the market is flush with capital. And so people are going out looking for investment, and a lot of bad ideas get invested in. And I think that's fundamentally what we saw in 2017, was that I think if people really look, they're going to see that bull market was basically due to ICOs, to the ICO craze. And what was that craze? Well, what did it shake out to be in 2018? It shook out to be a whole lot of bad ideas, a whole lot of people who were trying to get rich quick by basically flipping their tokens, and those people got wrecked. And so what we're calling the bear market is really a build market. And so what you saw during that time was still a lot of bad ideas, but you didn't see those ideas getting funded. You saw people really have to lay out a product, whether that was in the form of a business or in the form of a open source project that then was further funded at a later time. And that's, I think, why we saw the market stay relatively stable with a sort of gentle downward curve throughout 2018. And then, of course, when we are sitting now at the end of 2018, after, I guess, what most people would term as a crash, certainly an evaporation of value in the market, that really what we're seeing is those bad ideas from 2017, finally the people invested in those capitulating. There are so many great projects that evolved in 2018, though, and so many great connections between people, a whole new breed of developers and entrepreneurs that have entered. So I think there's nowhere but up to go for the next year, and I'm super excited about it.
Now here is Roger Veer's answer.
I think the key is to be building during the bear market, because if you're confident that another bull market is going to come, you need to be prepared to deal with the onslaught of new customers and new users and that sort of thing. So right now, Bitcoin.com, we're busy building all the infrastructure so that the next time crypto's in the media and there's a big wave of attention, we're going to be ready for all those people to be onboarded to the Bitcoin.com wallet and all the platforms that we're building.
Finally, here's Miko's take on building during a bear market around what it means to be a professional investor.
Technically, it is someone who's investing someone else's money. That's a funny way of putting it, but I think that's probably the legitimate way of looking at it, because a professional is someone who's been hired. The question is, hired by who? And so clearly, there's an investor who's hired the professional. But what does that mean? A couple things it means is that a professional actually dedicates the time. So instead of you have a day job doing this and then you trade or you invest on the side, it is someone who does that essentially all the time. So to me, if you want to understand kind of what it takes to be in a bear market, really the thing that's great is, Warren Buffett, one of the greatest investors of all time, said you should be bold when others are fearful, and you should be fearful when others are bold. So to me, that is really the hallmark of understanding what a professional does.
The greedy, fearful adage is easy to understand, and you've heard it many times, but it's deceptively difficult to practice, mostly because of our hardwired psychology.
And I can tell you that there's three parts of your brain: the back part, which is kind of like a lizard. There's the middle part, which is kind of like a monkey. And then, the front part, which is the prefrontal cortex. That's really, rationalism is the hallmark of a professional investor. And, the way you get your lunch money taken from you is you invest from the middle part of your brain, the monkey part. So, when there's blood in the streets, that's a good time to accumulate.
What would investing from the lizard brain look like?
Well, so the lizard brain investment is really more twitch reflex, right? And so I think day trading is one of those types of things, where you're really looking at kind of action reaction, and I think that's in the current market. I think, 6 months ago, I think that was a feasible way to invest because there were so many momentum traders, right? So you could trade on things like news, and to me, that's not really that feasible because what happens when it becomes professionalized, if you look at the actual way that the fiat economy works, there's a huge number of algorithmic traders. And so, you can't outrun a high frequency trading algorithm. Like not only has faster reflexes than you, but it actually trades on the alpha signal of behavioral economics, right?
While high-frequency trading is not very prevalent yet in crypto trading, you can bet it's coming. To summarize the answers, first take stock of what you're doing, what's important to you, what part of the brand you're using, and keep building for the next bull market. My second question is on how the next wave of growth in the industry will play out. We started with Miko. Remember that he is a venture capital investor, so what may be a good investment for you may not be for him, and vice versa. Going into 2019, do you think there's a chance of crypto assets appreciating on the basis of fundamentals next year? Or are we more reliant, at least for next year, on a new wave of speculators to fuel the next bull run?
Here's what I would say. From a market timing perspective, I'm not an expert prognosticator. I don't want to call a Bitcoin number. I don't want to do a John McAfee style bet on a number. So to me, the thing that I think is clear is you have to properly segment the market. So, I think there's three broad segments that I call asset-backed, service-backed, and infrastructure tokens. So I think that we have to reason about them independently.
And Miko, can you define those three tokens, please?
Yeah, absolutely. So the asset-backed ones, it's pretty obvious because it's anything that's backed by an asset. So if you look at those, people call those security tokens. I really dislike that phrase because it conflates the regulatory status of the token with a functional definition.
Listeners, Miko makes a great point on the term security tokens. We will use both asset-backed and security tokens interchangeably in this episode. My favorite example of an asset-backed token, imagine easily being able to purchase tokens representing shares of a commercial real estate project. One of the main advantages of a security token, as opposed to a traditional investment, like shares in a private corporation, is liquidity, or simply the ability to easily exit your investment by selling your tokens on an exchange, as opposed to try and find and sell to a specific buyer offline.
So to me, the regulatory status should not be conflated because, Jay Clayton, the chairman of the SEC, has been very clear that just about everything he's seen is a security. So, what that means is, it's a little bit like trying to talk about non-unicorn animals, right? It's basically the phrase security token doesn't mean anything because in the United States where I live, it means everything, right? It means all tokens. So, if you have a word that modifies the word token and it encompasses all tokens, then you might as well just say all tokens. So security token doesn't mean anything. So I don't like the phrase. To me, I like asset-backed, and if you really want to put a fine point on it, you can say regulated asset-backed token, or you can call it a tokenized security, which is super clear you're talking about a class, a regulatory class. So that's one class. The second class is...
Example, asset-backed token is like Tether, assuming it has all the dollars in their bank account.
Correct. So, asset-backed would be backed by... So a lot of so-called stable coins are backed by a currency asset. You could see a real estate token that's backed by real estate, any commodity backed by, one of the resurgent notions is backed by equity or a basket of equities. So something like a tokenized venture fund, like a Spice VC or like a blockchain capital, science. A number of these are starting to list on Open Finance Network. So, those are all asset backed. So, basically an asset is a thing you can essentially redeem the thing with the token. So that represents your ownership of a thing. Service-backed is basically like the classic so-called Chuck E. Cheese token. You basically use the token to access a service. Interestingly enough, you could look at Ether from the perspective of a service, although most people don't think of it that way, right? Which is essentially that, Ether is used as a gas token. So you're essentially accessing the Ethereum network and using it on the network. Not the most perfect example, actually, because of so much conflation and confusion about Ether. Ether is treated more like what the third category, which is I call the infrastructure coin. And infrastructure coins are backed by what I call everything and nothing. For example, if you take Bitcoin, it's backed by everything and nothing. And what I mean by nothing is that there's no fractional or central bank reserve, or there's no asset that backs Bitcoin. However, if you paid me 10,000 Bitcoins, I would deliver you 2 hot pizzas. What I mean by backed by everything is that, obviously they can be used to access assets, and they can be used to access services. They can be used to access anything as long as, the system has sufficient, trust. Those are the 3 broad categories. So, in order to reason about the space, I think it's important to kind of differentiate. So I would say the following. If you look at asset-backed tokens, that's essentially the real economy. And what I mean by the real economy is as soon as the regulatory aspect of this becomes clear, then you're talking about assets. Obviously, venture capital is a fairly esoteric asset. And, the market will, I think, for the first time, provide access to that kind of token to people who are kind of regular human beings and not anyone special.
It's important to note that by special, Miko is referring to both A, those that have access to inside deals and investments, and B, being an accredited investor, meaning you have to have a net worth of $1 million or more. Okay, back to the show.
I think that's an interesting thing to watch. Another interesting thing to watch is just the broader movement of assets, including commodities, precious metals. We're going to see real estate. So if you look at that space, there's going to be probably $1 trillion next year of assets that will be represented by regulated tokens. But the question will be, what is the amount of liquidity? So I think, that's something that's reasonably predictable, which is it looks like the latter half of 2019, we'll start to see more liquidity for these asset-backed tokens, so-called tokenized securities. To me, that's, as a venture class investor, I'm not that interested in any of those, because the only ones that have the property of going 20x or more are the ones that are venture funds. And as a venture capitalist, I don't take my investment fund and invest it in other venture capitalists. So that asset class doesn't make sense for me and my fund. The segment that we have to study are the 2 remaining segments, infrastructure tokens, and we have to look at these so-called utility tokens, another very bad name. I would call them service-backed tokens. And to me, the service-backed tokens are the region where you're most likely to see fairly extraordinary returns. And I think when you talk about fundamentals, your question was, will we see tokens that are lifted by fundamentals? Will we see the market lifted by fundamentals? It's unclear. I do believe that we will see tokens lifted by fundamentals. Whether that is enough to lift the entire crypto economy, it's a little unclear, right? Because if you look at the crypto economy, it's really a standard economic spectacle, which is that the thing that's novel about it is there's a lot of hype and speculation. But underlying the hype and speculation, the equation is simple, which is we can crib this equation from, aeronautics, which is essentially lift versus drag. So this equation can simply tell you whether an airplane is going to fly, right? Which is how much lift is there and how much drag is there. And so to me, drag is anyone who is removing value and not adding value. For example, someone who is managing a company badly is producing drag because they're spending money, investors' money on salaries, and they're not producing any economic value, right? So they're not shipping products, they're not, they're shipping the wrong products, nobody's buying their products, right? So that's drag. The thing that I think makes the crypto space, a little bit novel is on top of that primary vector, there's sort of a huge speculative vector, right? And so one of the ways to look at it would be, there may be a very, very small number of tokens that individually produce enough lift that they can become airborne economically, right? And so, it really just means they have to ship a product or service, and that people have to actively use that product or service, and that product or service has to have viability in the context of people using it and using the token for it. So, that's the segment. To me, that segment is a segment of traditional venture investment, because we have, I've been in Silicon Valley for 30 years, and, we have ways of making that business work. Now, the majority of venture capitalists have trouble, but if you do it properly, you're going to get maybe at an early stage, you'll probably get a diversified portfolio of about, between 20 and 50 different assets. And it's different from public equities investment. I think in public equities, statistically, if you buy on the S&P 500, if you buy 100 symbols, you're basically completely diversified, right, at that point. But in private equities, smaller startup companies, you will not be fundamentally diversified until you've taken enough positions, because the power law of venture returns essentially dictates that the one hit in your portfolio will return more than all the other companies added together. So, in a way, it's unicorn hunting. That's the mindset of venture investing.
Just to make sure everyone's clear, the other two types of tokens are service-backed tokens. Think of Coin or Filecoin, where you are paying for storage space or receiving money for renting out your hard drive storage space, which you can think of as a decentralized peer-to-peer Dropbox. And a protocol token is something like Bitcoin or Bitcoin Cash, Zcash, etc.
Gotcha, unicorn hunt. So it's fair to say that at least your fund is more focused on the service-backed tokens than the infrastructure tokens?
So we do have a bit of a split. So, for example, we have invested in some infrastructure tokens. So one example of that is Space Mesh. So Space Mesh has a novel consensus algorithm, which is proof of space and time, and it uses hard disks. It's much another coin that's similar to that one is Chia. Bram Cohen's, the creator of BitTorrent, created a coin called Chia. So, we did not invest in Chia, but we did invest in Space Mesh. So we do have some infrastructure tokens, but, our bar for investing in infrastructure tokens, we don't come from infrastructure as investors. So our bar is we require really, really qualified co-investors. So we co-invested with Polychain and Dan Hua and some people who are pretty famous for going pretty deep in the tech DD.
Roger had a pretty straightforward message.
It's just been a bunch of speculators speculating on the future speculation of speculators. Try saying that 10 times fast. But I think the only sustainable bull runs will be caused by people actually using cryptocurrency in commerce for some sort of business use case. And so like my favorite one I've been mentioning for years, of course, is Purse.io, where people can save 30% on every purchase from Amazon by using Bitcoin Cash. But there's lots and lots of other use cases out there. BitPay, of course, where they're enabling any website to be able to accept payment from anyone around the world with zero risk of chargeback or payment fraud or that sort of thing. That's a fantastic use case as well. Coins.ph, where you can send money to the Philippines just like that from anywhere in the world, and that people can receive it just like that. Like, that's another fantastic use case. But speculators speculating on the future speculation of speculators, that's not sustainable. That's, like the very definition of a pyramid scheme. So let's build actual real use commerce use cases for cryptocurrencies, and that's what we're busy doing at Bitcoin.com.
Vin focused on how to think about regulation, a topic that comes up on just about every episode of This Week in Bitcoin.
The one good thing that happened in 2018 is I think we got a lot of clarity in terms of how governments are going to view and regulate this space. And I think that was super, super important. That was a very important signal. And it was something that was lacking in 2017. We realized, it's not the Wild West. And so now you have people, I think what we're going to see shake out in 2019 is sort of a competition between two ideas. And I think that this may have really been the split in BCH and BSV, or Bitcoin Cash and Bitcoin Satoshi's vision. I think that that's going to be a model for these two ideas or notions that are going to sort of battle it out in the crypto marketplace. And they're in relationship to governments, in relationship to the state. One side is saying the state is going to regulate this. And so we need to be sure to be compliant with the regulations. This is going to be the people who are going out and both trying to do a little bit of regulatory capture, trying to get a few states, places like Wyoming, Nevada, New Hampshire, to pass laws that are amenable to cryptocurrency and blockchain companies. This is also going to be people who are building their implementations and building out their infrastructure with a mind toward complying with specific government regulations. This might be in the security token space. I think that's going to be big. We're going to see that blow up. On the other side, and this is the side that's much more interesting to me personally, is we're going to see, I think, a continuation and an evolution of really what Satoshi began, I believe, with the white paper. And that is saying governments are bound to regulate this just because it's valuable, and any government is going to regulate anything that's valuable. However, we can build things in such a way that they are exempt from current regulations. And the reason why I think that that's a much more interesting way to go is that it really requires thinking outside of the box, and it really is a forward movement of the paradigm shift that Satoshi Nakamoto started. Because Bitcoin, when you really delve into it and you're really leveraging all of the capabilities that it has, is such a paradigm shift that it really does go outside of definitions and regulations. And so I think that the most exciting space, and certainly the space that I am going to be the most invested in, both with my time and my capital and my sort of mind share, is that space that stays out ahead of the regulators, because necessity is the mother of invention. I'm not saying that anybody should go out and break the law. I'm not suggesting that that's the right path to go. But what I'm suggesting is that to begin thinking about moving the space forward, particularly financial services, in a way that is not regulatable according to current law. Make the lawmakers, make the governments follow Bitcoin, not the other way around.
And finally, here's Gabriel Cardona looking back at the dot-com boom, unlocking the value of the internet, and comparing that to unlocking value in the crypto ecosystem.
Sure, great question. So the cliche, which I have used many times before, and which I think still feels true to me, is the dot-com boom, which, was based around Silicon Valley, but it was somewhat around the rest of the country and world. And, the idea being that in the late 90s, people who knew what was up, computer scientists, engineers, teachers, venture capitalists. So, at the end of the 90s, basically, the kind of people who knew what was up understood that the web really had the potential to change everything. And so a bunch of money sort of rushed into this dot-com boom. And then people realized that the web wasn't mature enough yet. And so a bunch of money rushed out of the dot-com boom. And then there were several years in the early 2000s before the web matured with HTML5 and Ajax, and we kind of had Web 2.0. And then, that led into mobile and everything we see today. So, there was that period after the dot-com boom before Web 2.0 where a lot of money rushed out and people questioned, is the web going to make it? That kind of typical thing. And, I think that is similar to what we witnessed last year with, just the incredible explosion of value across all of the different cryptocurrencies. I think similar to the web at the end of the 90s, people who understand the power of disruptive technology to sort of creep up on the world and change everything overnight really do appreciate that the blockchain and Bitcoin and surrounding technologies have the potential to change everything in a drastic way. So the hype is real. That's why there's legitimate hype. But the technology is not totally mature, and that's something we all deal with on a daily basis if we work in this space. It's just how much of the different ecosystem isn't yet even there, and that's why there's this sort of land grab and this gold rush to build out all the different infrastructure for all the different tokens and coins, because even though the technology has great promise, similar to the web at the end of the 90s, there is not a huge amount of infrastructure or users or app developers. There's not a huge knowledge base, et cetera, et cetera. So a bunch of money rushed out when at the end of last year, December, a single Bitcoin is worth 20 grand. People realized, whoa, what am I buying into here? It's just, making the network clogged up. Transactions are slow and expensive. So a bunch of money rushed out. And I use Bitcoin as an example, but it happened across the entire industry, as we all know. So now we're sort of in that phase before Web 2.0. So now we're in this area where it's kind of like, will the blockchain survive? That kind of question is out in the media. But people who work in this space know that nothing has changed. If anything, the technology has only matured since last year, and we've made leaps and bounds across the board. So, I kind of use that example. Earlier this year, I was fortunate enough to have a dinner with Michael Novogratz from Galaxy, who's, a true wizard, and it was an honor to have a dinner with him. And I was saying what I just said to you to him. And, he pointed out that, and I hope I get these numbers correct here, so, somebody feel free to reach out and correct me. I'm sure they will. But he was saying that, when crypto peaked last year, it was only like $1 trillion. I say only, but let's say it was $1 trillion. And the phenomenon was worldwide. He says, and again, I hope I get these numbers right. I don't want to misquote him, but I'm nearly sure this is correct, that whenever the .com peaked in like 2000, 99, 2000, it was something like 25 trillion if you adjust for inflation. And of course, it was mostly based around the United States, although it was a little bit around the rest of the world. So, he was just pointing out that the .com in theory was, 20 times larger than what we've experienced with this sort of boom and then bust related to sort of coins. But anyway, so to answer your question, in my opinion, similar to how the .com was based on hype, the boom was based on, or the bust, I should say, was based on discovery that the hype was not yet mature. And then Web 2.0, which is really, the birth of Google and Facebook and Twitter, which then led into everything we know today around the world with social media and mobile. All of that stuff was when the web matured and real utility was shown by app developers and people building platforms. So in my mind, even though things are cyclical and seasonal and you can kind of always guess that the pendulum is going to swing back and forth, yes, of course, I expect there will be another boom cycle in crypto land. I don't doubt that for a second. I hope that it's driven by actual utility and actual apps, because the truth is the technology is mature enough today. There's plenty of good platforms out there, Bitcoin Cash, Ethereum, others included, where people can build applications that are very, very powerful and disruptive with the technology that exists today. We don't need another 5 years. So yeah, I suspect 2019 will be the year that utility around these different platforms really starts to come into focus, and that is what will trigger the next bull market.
Like that. Okay, it's interesting. So it's like recognizing, on one hand, it's still pretty rudimentary in the infrastructure, but it's further along than you think, and it's enough that in 2019, based on fundamentals we could have, that could kind of show itself. I'm sure you're familiar with Amara's law, that we tend to overestimate the effects of technology in the short run and underestimate them in the long run, the internet being the easiest example, but there's plenty more.
Yeah, that's a great example, and that's a great saying. So yeah, I agree with you 100%. And I think that really just giving the technology the chance to shine now is sort of the next chapter.
So the main takeaways from number 2 is separating which type of tokens we're talking about, whether, security tokens or asset-backed, utility tokens or protocol tokens, and thinking about how to avoid or minimize regulation by design. The next question was on the Bitcoin Cash and Bitcoin SV split just last month in November. It was at the center of cryptocurrency news, and it definitely felt like a historic moment. I asked Vin about it first. At least in the short term, the community of Bitcoin Cash was definitely tested by the BCH BSV split. So my question for you is, will the Bitcoin Cash hard fork matter a year from now? Be it positive or negative? How will we look back at this?
I think this is actually a much more important fork than the BTC BCH fork. And the reason why is that this was truly an ideological difference that made the split. It was a difference in the interpretation of the white paper of what is Bitcoin, not really a difference in the interpretation of what is the sort of best technical roadmap to be laid out primarily for security. That's what the BTC BCH sort of split and schism was about, that it was one side really being super conservative and fearful about the future security of the network, and the other side saying, we need to put fear away and we need to venture into the unknown. With BCH and BSV, you really have this almost religious battle, this religious schism. And I think that it did move the space altogether. Well, it certainly moved it in terms of if you line up where the crash happened. I think that the most fundamental thing that it did was it changed the notion of what is Bitcoin. I think that this split, the Bitcoin Cash schism, really showed that Bitcoin is not just a piece of software. It's not just a virtual currency. It's not just a computer network. It's a community. It's a community of real human beings who have real visions for the future. And whether or not they are massive holders and miners, or they're just people who are interested in the future of where Bitcoin is going to go and where cryptocurrencies are going to go, people are going to voice their opinions, and people have strong stances on this. And so it is going to matter, because I think that it sets the stage for many forks in the future. And I think that it's also through this community, through this almost religious faith in Bitcoin and in what it can bring, that's really where the next wave of adoption is going to come.
Gabriel also compared the BCH-BSV split to the Bitcoin Cash hard fork from BTC last year.
Yeah, so I do think it will matter in the same way that the BTC and BCH fork mattered. So, there's a lot of very smart people working on BSV. That's not something that's just going to go away. And so, yeah, it matters in the same way that when BCH forked off from BTC, or however you view it, BTC forked off from the original Bitcoin, a new tribe was created. And this tribe is very, very passionate about the ideology behind what we're trying to accomplish, and BCH will survive. And BSV is very similar. So, I think that it does matter. Before the fork, I was saying in an interview with somebody, like, in my opinion, the fork really would have been the most disruptive thing that we could have done, because we just had so much potential at that particular moment. And I still feel it personally. I feel it across the industry. It's given a lot of people a lot of uncertainty. It's given a lot of developers problems. And so, I think what's good about it is that the great thing about open source software is that you can witness like a Darwinian evolution. So, whenever something forks into multiple different sort of tribes or bodies of software, however you want to look at it, it's really like two biological organisms, and they have a chance to evolve different traits. And that's why Bitcoin Cash, with its difficulty adjustment algorithm and larger blocks, is different than BTC with SegWit. It's kind of like two different organisms, if you will. And you get a chance to sort of see them play out in this Darwinian fashion where they can compete against each other. And you really want this because you want all ideas to be tried, and you want the very best ideas to win in this ecosystem, and then to rise and challenge against each other. And then ultimately you just have these battle-hardened ideas that are very, very good. And that's how you push, the progress of the world forward. Yeah, I just look forward to going on and creating great things.
Related to speculation and trading, Miko talked about the overreaction to short-term events.
Well, the thing that's interesting is that, because of the speculative market, I feel people tend to overreact. And I think when you look at a speculative market, it's almost like riding a horse that gets spooked easily. So the horse is easily spooked, right? Because, people were blaming the Bitcoin Cash fork for the performance of BTC. And that feels a little extraordinary given that, there's not that much effect. There's a certain kind of mining bleed over if people cut some of their machines over from, BTC mining to BCH mining, but that's not a steady state movement. That's just, locally people, and if there's some buying of BCH ahead of the fork in order to take advantage of the split, like things of that nature. Yes, it's not a completely isolated event, but if you were to historicize this, I think you should take the lens that goes all the way back to the Bitcoin white paper.
Miko also echoed similar thoughts on the power of open source protocols and governance. He has been involved with open source software for many years. He pointed out that there is a lack of understanding of how open source software evolves and grows. Forks are by design. And remember, an open source protocol is not a company. There is no CEO running it. He also went on to talk about custody and private keys.
The other place that we are where people shouldn't be that surprised is we've rebuilt the centralized banking system with exchanges. So, we've shown that the vast majority of people in the space don't understand the difference between holding the private keys and not holding the private keys. The thing that's amazing that all of this crypto winter has shown is it's shown that we're definitely not there yet. Like, people don't understand open source governance models. People don't understand custody. People don't understand the difference between Bitcoin and random altcoins. So the point I'm trying to make is that we do have a ways to go before we have a mature kind of financial market because people are lacking in understanding.
And finally, Roger, who is arguably the most important advocate for Bitcoin Cash, gave an honest and sincere answer.
I don't know. Short answer is I don't know. I hope it'll be looked back upon as something that was wonderful and the community got to move forward without somebody causing all sorts of trouble. And the fact that we see one side of the split, the SV side, busy trying to sue everybody and, trying to work with government to control this and that. Like, to me, you've missed the entire point of cryptocurrency. The entire point of cryptocurrency is to make it so individuals have complete control over their own finances and they don't need permission from regulators or politicians or banks or this or that to do what they want with their own cryptocurrency. And if you're busy trying to sue open source software developers for writing software code, you've kind of missed the whole point of cryptocurrency. So I think and hope that it'll be a good thing that those people that want government involved in their cryptocurrency are no longer part of the Bitcoin Cash community, but maybe I'll be wrong. We don't know.
Yeah, and just out of curiosity here, when that obvious bogus lawsuit against you and Jihan came out, was your first reaction just like, doesn't surprise me, or how did you feel?
I guess my first reaction is like, statists are going to state, and this is just proof that these aren't the sort of people that we want to have in the community. And if you're suing open source software developers for the code that they wrote, like, I'm having a hard time thinking of something that's more, opposite to the spirit and the ethos of the CryptoCoin ecosystem. Like, cypherpunks write code, statists sue the cypherpunks for writing that code, I suppose. So I want nothing to do with people that are busy suing open source software developers for having written code. Like, that's just outside of my worldview, so far outside of my worldview.
My next question was a quote from the popular Bitcoin Reddit page, RBTC, from Vitalik Buterin. Remember, while to most of us listening, the BCH-BSV split was a big deal, 99% of human beings didn't even know it happened.
It's such a small community, right? The 99.9% of people don't know anything about the BCH-BSV. Vitalik recently stated on RBTC, quote, "At the end of the day, the goal of BCH should not be to grow its community by grabbing off a few more BTC and BSV supporters. It should be reaching out to larger communities in broader society that stand to benefit from what it has to offer." So how does the Bitcoin Cash community reach these larger communities?
I 100% agree with Vitalik. Vitalik's an absolute genius, and he's spot on. There's still a lot of animosity and anger in the Bitcoin Cash community towards the BTC community for having hijacked the Bitcoin project and having hijacked it by using censorship and propaganda. But Vitalik's right. We need to reach out to the masses and get people that, don't care about the censorship, don't know about the history, don't know what went on. We just need to give them the most useful cryptocurrency in their lives. And if it's the most useful cryptocurrency and more useful than banks and PayPal and credit cards, they're going to start using it. And so, the example I keep harping on over and over and over again is Purse.io. Save 30% on Amazon using Bitcoin Cash. Of course, that's a fantastic reason for everybody to use Bitcoin Cash, regardless of their politics when it comes to, Bitcoin Cash versus, Bitcoin Core. So go and try Purse.io today to save 30% on Amazon and tell a friend.
Yeah, for sure. You're right. The pragmatism there. Not everyone wants to hear about the way the Federal Reserve works, et cetera, but their eyes will more likely light up when you tell them they can save on Amazon, which is by far the biggest e-commerce website in the United States, if not the world.
And not just save a little bit, like 30%. That's a huge savings.
Here's Gabriel Cardona's response.
I agree, of course. I think Vitalik is great. And, I saw whenever he weighed in on that, and I thought that was important to kind of, number one, to sort of step back and ask myself the value of, Bitcoin Cash and what it brings to the market and what are its strengths and what are its weaknesses. And, I arrived upon a similar conclusion, and it's basically just that Bitcoin Cash solves a problem which is sort of very fundamental, and that is money. Like humanity is sort of at this very interesting place in our evolution, and we're evolving to like this worldwide society where it's all wired in together. And having digital peer-to-peer electronic cash, which is not backed by a state, but which is backed by computer science and mathematics, and which is, similar to the Internet of Money, and which democratizes finance in the same way that the web democratized information, is really the right move. And it's ultimately going to be one which empowers liberty across the world. And so, what we're doing is very, very important. And we have a solution to a problem that people all across the world have. So as the world sort of wires into this one big global community, we can appreciate the division of wealth between the rich and the poor across the entire planet, and we can see that there are a lot of poor people across the planet. We can do a lot to uplift the human condition across the world. And technologies like Bitcoin Cash enable that because they empower individuals and they disempower the state and war and banks, central banks, etc. So, to me, I think that though we have, internal fighting while we sort of have forks and stuff like that, the tribe that we talk about who live and breathe this every day is very, very small. And we're at the beginning of a great revolution. So it is very similar to the beginning of the web. Whenever you realize that in the late 90s, the reason all the original bloggers knew each other when blogs first started blowing up in the 2000s was because it was such a small amount of people who were hanging out on that website, The Well, or hanging out on news groups or hanging out on different email threads. So you realize when you look around, it's similar to what we have now. Our tribe is very small still across the entire crypto sphere, not just Bitcoin Cash, across every one of our competitors, all of our friends. It's very small. It's very close-knit. We know each other very well. But the next big wave is when we reach out to all of humanity, and the technology which we're building really flowers and shows its full potential and does in fact help uplift the human condition through financial liberty.
Gotcha. So by solving the problems, it's building infrastructure and getting useful apps out to people that can use it? Or how would you say that?
Yeah, of course, you know how I approach everything. I'm an app developer, and that's pretty much what I obsess on every single day. So yeah, absolutely. I mean, the biggest play out there is to create tooling which empowers people to create applications. And that's simply because, why is the web so powerful? Because it's in every one of our lives in so many ways. Well, how is something as abstract and as big and powerful and distributed as the web in every one of our lives every day? Well, through the apps we use. I'm chatting with you across the web. I'm doing my email on the web, all the text editing, everything we do. So, money is fundamental to the human condition. I often say, what is bigger? What is more meaningful to people's lives? Is it money or is it the web? And, it's hard for anybody to give a concrete answer to that. So, I challenge anybody out there to consider that. But you could argue it both ways. You could obviously argue that the web is huge. It impacts everything and everybody and is very meaningful. But you could clearly say the same thing about money. And we have a history with money that is much older than the web, of course. So yeah, to me, building the application layer, which sits on top of smart money, is really when you talk about the web, the Internet of money. So, if you really kind of want to, it's money of the Internet, that's sort of V1, but the Internet of money is V2. And that's sort of what we're building now with this web of distributed apps and tokens and smart contracts and everything about that. So that's the most exciting thing, is that Bitcoin Cash, our entire tech stack, is maturing, and that we're going to start to see more applications, which will in turn drive more usage through sheer utility. That's the plan.
Vin highlighted how much work we have left to do in order to get worldwide adoption. What will that look like?
Well, yeah, I mean, clearly I agree. I live it every day. That's part of what Cointext is about. That's what the vision of Cointext is. I mean, in the U.S., I believe the latest survey, I think it was a Pew survey, that said only 8% of Americans have ever owned cryptocurrency. So we have 92% left. That's a blue ocean. I'm somebody who also feels the same way. When we created Cointext, the idea was we're going to make it easy to onboard people who don't have a Bitcoin wallet, who do not own cryptocurrency. Those people who, when I go on a plane and I end up sitting next to somebody and talking to them about what I do, and by the end they say, well, that's so interesting. How do I get some Bitcoin? And while it's great, and people like Roger Ver have been absolute heroes in terms of, getting people to download new wallets and sending over some Bitcoin Cash, I think that we can go further. We need to penetrate this into every aspect of life. And we'll know that we've succeeded. We'll know that Bitcoin has taken over when people don't even realize that they're using Bitcoin. In the same way that, I mean, do I really know what currency I'm transacting in if I pull out my Visa card when I'm traveling internationally in a country that doesn't use the US dollar, even though, I'm primarily depositing US dollars into my bank account? Somehow my Visa card works everywhere in the world, no matter what the currency is. And I think that that's really the vision for the future of Bitcoin. And that's the audience that I'm going after. I'm going after the rest of the world. And I also think that, with that vision in mind, what people think should and should not be done, what existing users, old schoolers, believe about the way that cryptocurrency should be used, I think that we should take that with a grain of salt. And we should be experimenting, and we should see, okay, well, we know what people in our community want. But if Bitcoin's going to take over the world, we're just a small portion of the total people that will be using it. So we need to start experimenting and see what the rest of the world wants, because it may in fact be different than what we want.
I love that. Yeah, the awareness and humility there to understand what people want, and also pragmatism, because whether or not you have libertarian ideals, if you're trying to educate your next door neighbor who knows nothing about technology, and if it's just, hey, save money on Amazon and sending money back to your family in the Philippines, then that's the argument you go with, or else you're being selfish and ineffective as a leader.
Yeah, you got to meet people where they are. That's the most important thing, not where you are, where they are.
Miko also emphasized the fact, yes, it's a fact that sometimes I know I personally don't want to hear. Cryptocurrencies at this stage are still a big, exciting, and potentially world-changing experiment.
Yeah, so to me, all of these things are experiments, including BTC, and so from my perspective, if I really scrutinize BCH, BCH is really a thesis predicated on the first sentence of the abstract of the Bitcoin white paper, which is peer-to-peer electronic cash, right? And so to me, if you look at it from the perspective of primary utility, I think what's necessary then is to establish things like point of sale, things like e-commerce. So I know Roger was a pioneer in Bitcoin e-commerce, probably the first meaningful Bitcoin receiving online store. And so, I feel like logical places for it would be to get acceptance, and utilization, right? Because if you look at utilization as a spend coin, then you really start to look at development of these sort of primary Keynesian accelerators, right? Which if you study that stuff, I know Roger's quite a well-read economist, you start to understand that the Keynesian accelerator is essentially, the common example is that the baker's kids needs shoes. So if you go buy bread from the baker can take the money from the baking and then go spend it at the shoemaker, and then the shoemaker can turn around and spend it somewhere else, and so that's sort of primary velocity of money. So to me, if I were to, armchair quarterback the BCH community, I would certainly be looking for, either, I think the easier low-hanging fruit is really e-commerce, which is already, almost fully electronic. It's fully electronic until the box shows up on your doorstep, which is not electronic. Although most of the boxes that show up at my house contain electronics. But, the point that I'm making is that really getting that primary usage, I think, would be a huge economic lift. And, I'm hoping that we can see that happening over the next couple of years.
Great ideas here on worldwide adoption, commerce. I'd like to emphasize that on the Bitcoin.com podcast network, we are hyper-focused on making accessible content for the 99% of people in the world who know very little about Bitcoin so they can learn and get involved. Whether it's Humans of Bitcoin, where we tell personal stories, how people's lives have been changed by crypto, or Blockchain 2025 on blockchain tech. While we're not always perfect, we want all of our episodes to be as accessible as possible. My mom should be able to listen and understand the episodes. I'd also like to make a quick plug for developer.bitcoin.com. If you are a developer, or if you have a friend who is a developer, tell them to visit developer.bitcoin.com. Learn how to develop e-commerce solutions, applications, and build the infrastructure for peer-to-peer commerce with sound money that the world desperately needs. And don't forget about tokenization, which Gabriel mentioned. There's documentation to bring ERC20 tokens to the BCH protocol. check out developer.bitcoin.com. So along the lines of adoption, many argue that the developing world will adopt cryptocurrencies before the developed world. So I asked this question to Vin Armani, whose company Cointext works in a lot of developing countries. At the end of the day, cryptocurrencies have to be used as cash, as currency, as money. How do you see the usage of crypto in 2019 playing out, on this thesis of being used as currency, and especially with a focus on developing countries like Venezuela?
I think that we do have some way to go in terms of building out the infrastructure for Bitcoin to be used as cash. I don't think that the current UI, which is basically a smartphone app and QR codes, is going to be the user interface that is, in the end, adopted. I think in order for it to be used as cash, the user interface has to be as easy as cash. And that's something that I'm personally exploring, different user interfaces that people haven't used. I think near-field communication, Bluetooth, we're talking Internet of Things, we're talking touch cards, all of these things, sort of more automated aspects, auto-paying, micropayments, all kinds of different identifiers that we can use to then hash into key pairs. All of these things really need to be explored before it can be used as cash. And I think first and foremost, those of us who are in the space, who have a good grasp and who have some infrastructure within our own companies, need to start exposing more of that infrastructure to developers. We actually need to start onboarding developers and especially designers. This is something that is not really prevalent in the space. Bitcoin does not yet look beautiful. And I think that that's because it hasn't been made easy enough for designers who are not always hyper technical, but do have some technical background to integrate into their products. And so I'd like to see more point of sales, more payment devices, more ATMs, and they need to look beautiful. It's something that has worked for instance, Apple, and I think that it's something that can work here to bring in those first early adopters. It's got to be aesthetically pleasing as well as economically pleasing.
I've discussed this a lot with Kelso over at CoinSpice. And again, you talked about the kind of designed for developers, and it looks cool to usually the men using these apps. But I think as a pragmatic, not a political reason, you have to think about design for women, because women are at least 50% or more of shopping. And I think a lot of the apps, which may look good to me, having that awareness that, hey, it may not look so good to my sister. And that's very important.
That's right. Huge considerations to make there.
Here's Miko's thoughts on the developing world.
Yeah, I mean, there's no question, right? I think it was Uganda had something like 40,000 traders joining Binance when they launched there, so there's no question that that's happening. I'm advising a startup based in Cape Town, South Africa called Walla, and they're showing a lot of traction. They've got, a lot going on. There are places like Zimbabwe where someone at a conference handed me a $50 trillion bill from Zimbabwe. And it turns out that the actual cash value is zero, because that note is no longer recognized by anyone. However, the novelty value is relatively high. From a perspective of like senior age, you can actually sell $50 trillion Zimbabwe notes on eBay, because they're novelties. People enjoy handing them around, and, I certainly enjoy getting mine. But to make a long story short, when you look at collapsed fiat economies, there are certainly ones, I know the Argentine peso has suffered quite a lot. Other currencies, I know the Turkish lira has suffered from some hyperinflation. So when you start to look at hyperinflation, in a way, when you look at the collapse of Lehman Brothers and the birth of Bitcoin, you really have to see a correlation between weaknesses in the traditional economy, and potentially having a decentralized alternative produces more benefit for people who are being poorly served.
Miko also mentioned the Silk Road as an example of serving a market that was underserved, even if he doesn't personally agree with drugs being legalized. But another simple, profound message: serve those that need to be served. Here's Roger Veer's answer.
It's up to us to inform and educate the people that they have a better option than the Venezuelan bolivar or whatever these other currencies are out there. So let's build the tools and spread the knowledge to make it super easy for people to opt out of less efficient, less useful government monies. But in order for people to opt out and start using cryptocurrencies, we have to build the tools to make it easier for them to do so. So that's what we're busy doing at Bitcoin.com, and that's what lots of these other businesses are busy doing. But, nobody can do it by themselves. It's all of us together. So if you're excited by the idea of building systems that people can participate in without needing permission from governments or banks, start building. Get out there and do it. So, or help those who are.
For sure. And Roger, you may or may not be aware of this. I mean, you were a generous donator to AirTM, and I think AirTM is one of the most impressive companies in cryptocurrency that most people don't know about. Just talking to them, I know merchants in Venezuela, they usually charge 6%, and they have the ability to give the best rates from Bitcoin Cash to the US dollar and connect to Venezuelan bank accounts as well, which is pretty hard to do considering the state of Venezuela. But yeah, I just want to highlight AirTM. This is not an endorsement. I just think they're doing some amazing things. And in March, I believe, is the $1 million airdrop, which Bitcoin Cash will be a big part of. So we talked about the need for cryptocurrencies in countries where the legacy financial system works very poorly, the importance of good design and UI UX, and the need for more infrastructure development. Gabriel emphasized the need for better metrics to measure the adoption that we are all striving for.
Yeah, I feel like we don't have good enough metrics, I think, is number one. So sort of like in the context of raw numbers, I don't know how the adoption is. What I know from the markets is that the prices are down. So that means this is sort of like one of those windows where only the people who are incredibly passionate are working on it. However, that's usually when the most exciting stuff is created, because it's only the people who care about the technology which have stuck around. And now, that being said, those are just sort of the raw numbers. What are the raw numbers? Well, unfortunately, we don't know. The maturity is so immature and it's so fractured across so many different tribes and so many different coins and tokens, it's hard to have a degree of certainty. We know for sure, like, for example, Amazon just recently launched a blockchain platform, which is around Hyperledger, and it's going to support Ethereum in their V2. Those signals, to me, are very positive because they show that somebody with the scale of Amazon is looking at the ecosystem and investing major resources into infrastructure. But those are just some things I'm sort of reading from different events. But do I see a need for cryptocurrencies around the world? I do, absolutely, because there's some very, very pressing problems which we need to solve in our world. And one of them is just the division of wealth between the rich and the poor, and another one is the turnkey police state. So, many of us who live in the developed world live in what I call the turnkey police state. So that's basically like intelligence agencies are collecting and surveilling all of the digital information which goes across the web, and they're storing it forever, basically. Even if it's encrypted, they'll crack it in 50 years when they got quantum computers, that kind of thing. And so all it takes is the change of administration. All it takes is the change from the top to turn on this police state, to just turn the key, boom, and turn on the engine. So all of us in the developed world are witnessing this. And then plenty of people in the non-developed world, of course, live in very rough environments as well. So, we really need to basically give people censorship-resistant and peer-to-peer cash because, like I said, money is so fundamental to the human condition. As I experienced recently in Beijing, being able to send money to anybody in the world anytime with asking nobody else's permission is very revolutionary, and it's something which is ultimately going to increase human liberty across the world. And that's really a problem that we can solve today and that we should solve.
You're right. The metrics are very difficult to measure, but it's important to increase, the awareness of people, the benefits and power for everyone of owning your own data and money. The last three questions are 2019 predictions. I started out with a fun question, and Vin has our first answer. Let's pretend I, Matt Aaron, was off the grid for 1 year. No internet, no human contact. Maybe I'm somewhere on an island. And then I come back in 2019, I call you up like, hey, Vin, what did I miss? If you had 60 seconds to fill me in on the last 12 months, what do you think you would say? 2019 was the year of?
Yeah, I would say that the price climbed back up. We're not yet in a bull market, but the price climbed back up. More capital entered into the space. There were a lot of new projects. And I think that we're going to have one big exchange application that is going to fill the void left by Shapeshift. And I think that that's going to be sort of what is remembered as 2019's sort of big thing. And I think that it's going to be something that brings a lot of people back in, and it's going to be one of the reasons why the price goes back up.
Any ideas what that exchange application will be?
It's going to be something like a peer-to-peer or decentralized exchange platform, something to that effect. I don't know whether it will be a trusted third party, whether it will be completely with smart contracts on a blockchain, but something is going to come along and fill that gap. There's a lot of projects that are in sort of a gestational stage right now that I think we're going to see in 2019. There may be a rush for that, and whoever gets it is going to be a significant player.
Here's Gabriel, who took the perspective of the world's biggest problems first.
That's such a good question. So, I think let's approach that in like three different sort of levels. I think let's talk about a high level, at a global level. What happened in 2019? What would I like to see happen in 2019? So I think something I've been predicting that we'll see, and we're starting to see the first bit of it, and we'll continue to see it accelerate, is, I would like to see technology which brings nature back into balance. So, as I've mentioned, there are a bunch of critical sort of like humanity level problems that we need to solve in our lifetime, in our generation. And the most pressing one is simply that nature is out of balance. And if we don't bring nature into balance, then we don't have the runway to solve all of the different other problems we solve. And then as well to ensure that the people who come after us have a healthy environment to live in. So, history will not judge us kindly if we mess up the environment in a major way or while it's on our watch. And, that could happen in just a generation or two. So, I want to see technology which brings nature into balance. And there are several different examples I could talk about at another time that are very promising, that can bring carbon in the atmosphere back to pre-industrial levels in 10 or 20 years if they're deployed at scale. So, I think we're going to see some singularity level technology which really brings nature into balance, which will create unquantifiable wealth because it will increase the quality of living for everybody around the world as well as for future generations. So I think we're going to start to see that. And another thing I think we're going to start to see is technology which just gives people across the world more liberty. So to me, the story of the singularity is the story of the individual becoming asymmetrically empowered against the state. And you see that more and more every day, where one or two really good people who are really good with computer science or whatever their field happens to be are asymmetrically empowered. And so that happens more and more for personal liberty. And I think in the context of what I mentioned about the turnkey police state, which I believe is around the entire planet, we want to see more and more technology which gives people more and more liberty. And of course, I think that we're working on that with Bitcoin Cash, and I believe there are a bunch of other very promising technologies. So at a high level, from our society perspective, in 2019, we see technology which starts to bring nature into balance and technology which gives people more personal liberty. In the crypto space, so I think 2019 is the year of the stable coin. So, to me, I think stable coins are completely radical. And I know that there is some very, very smart people out there who are naysayers and say that it's not possible to have a stable coin. I actually suspect that it is possible, although I'm not going to, I'm not going to be probably the person to be able to design it. But my intuition tells me that it will be possible to have some type of stable coin that works most of the time for most use cases. Maybe not the most general purpose thing, which works for everybody all the time, but I think we've already seen some very, very promising stuff. So we know the original stablecoin was Tether. That's obviously not the greatest model ever because we can't see for sure that one Tether is backed by $1 because we don't know what's in their bank accounts and nobody can audit them. But there's other very promising ones like DAI on Ethereum, which is the most promising one in my opinion. There's also Gemini has one and Circle has one, and there's a bunch of others. In my opinion, I've been saying for a couple months that a stablecoin is the next missing piece of the Bitcoin Cash token ecosystem, and the functionality exists on Wormhole. You can build them today, and then there's a bunch of other potential ways to do it. So to me, like a huge barrier to adoption is simply volatility. Like if we want people to use cryptocurrency as currency, and we do, that's like the big deal. We need transactions at worldwide scale for this to make sense. We need people like real merchants to be able to adopt it, and they're unable to because volatility is very high and they can't be exposed to it. So there are things like BitPay, which can, shield you from volatility, where you can accept crypto and get cashed out to fiat instantly. Or there are things like stablecoins. And in my opinion, having traveled around to several hackathons at the end of last year and saw how popular DAI was with the Ethereum people, and sort of appreciating how volatility is a barrier to entry, I think stablecoins are what's happening in the year of crypto. Now, from the year of Bitcoin Cash,
We'll have more on stablecoins later, But Gabriel also sees a big year for dApps and tokens built on the Bitcoin Cash blockchain. He gives an overview of what he's excited about for Bitcoin Cash and development next year. For those who are non-technical, there may be a few things you won't fully understand. And remember, this is a deep dive on the Bitcoin Cash protocol in 2019, which I find fantastic. But just in case when you got this episode, you're looking for more general answers for the cryptocurrency world, this lasts about 9 minutes. So feel free to scroll ahead.
I think Bitcoin Cash is the year of dApps. So, I use the word dApps, and I know it's a total sort of cliche to people. It means something to me. So, Web 1.0 was the web of static documents. And this is what Tim Berners-Lee works at CERN in Switzerland. All these scientists are coming from all around the world. They need a way to share their documents. How can they do it? They can create HTML documents. Boom, static documents. Web 2.0 was a web of applications. So Ajax comes about. The W3C realizes the web developers want to create applications, so they introduce HTML5. There's ECMAScript, the new versions of JavaScript are out there. So the abstractions come about to allow the web to become a web of applications. Well, Web 3.0 is a web of decentralized applications, dApps. And this is basically just an app where some part of the infrastructure is built using a decentralized network, such as Bitcoin Cash or any peer-to-peer network, IPFS, stuff like that. So not just client and server model like traditional Web 2.0 stuff, but including something to do with a distributed network. So, in my opinion, Bitcoin Cash is really just primed for this. So I actually have a list of some things that are exciting to me. I'm going to read them off right now.
Great.
Yeah, if I get any of them wrong here, I invite the people to hit me up on Twitter and let me know what I got wrong. So these are just off the top of my head this morning, a list of things which I think are exciting right now on the horizon of Bitcoin Cash. So of course, you know me, the ultimate token shill. I think tokens are still huge and are going to be hugely transformative in Bitcoin Cash. So real quick, there's Wormhole, SLP, Kyoken, Counterparty Cash, Colored Coins, Tokeda, Bitcoin Token, Honeybagger, and Group. So, that's a 9 or 10 that are off the top of my head, different token proposals. I suspect there are going to be more. We've also got a high-level scripting language called SpedIn. So basically one of the problems with writing smart contracts for Bitcoin Cash is that the script language, which is called script, is very awkward. And anybody who's used to sort of modern object-oriented programming languages has trouble writing in this particular scripting language. I find it incredibly awkward. So there's this project called SpedIn, which is a high-level smart contract language for Bitcoin Cash. It's based on the Haskell stack. It's got a C-like syntax. It's functional, basically. You write smart contracts and it spits out script. So this is very, very powerful. I think it's going to be incredibly popular. Shout out to Tendo Pine Sama on Twitter. Also, the next is Cash ID. So this is from Jonathan Silverblood.
Can you spell that?
Yep, got it. So the previous one was SpedIn, SPEDN, and I'll also give you links for this afterwards if you would like. Cash ID, CASHID. And so this is by Jonathan Silverblood, and this is basically you can do secure auth into websites using your Bitcoin Cash keys. You can prove that you own an address by signing a challenge request, and you can include optional metadata. So basically the problem this solves is identity. So as I mentioned, one of the things I hope to see emerge this year is technology which brings liberty to individuals, because the story of the singularity is the story of the individual being asymmetrically empowered against the state. And to me, identity sits at the very heart of that. And identity has sort of been one of these long promised solutions that the blockchain could provide, which hasn't sort of emerged yet. And I believe it's going to be at the heart of some of the greatest value add that Bitcoin Cash has over the next year. So a couple ones that I think are very exciting are Cash ID, and basically this allows you to do secure authentication into websites using your Bitcoin Cash keys. So imagine a website can set up a service, and when you want to sign into it, the website will issue you a little challenge. You'll sign up with your Bitcoin Cash address, and then you'll pass in some optional metadata, and you'll be authenticated for that website. And this is a big paradigm shift compared to having to sign into every different single account and have a username and password. This literally allows you to use your Bitcoin Cash keys, which you can carry around with you across the web using technologies like Badger Wallet, or there's a couple other that are MetaMask-like solutions for Bitcoin Cash. So I think Cash ID is a big one that we'll look back on. Another one is Cash Address, also from, or maybe it's Cash Accounts, also from Jonathan Silverblood, I believe is his name, Monster Bitar on Twitter. So yeah, this is really cool. So this, one of the really great innovations, and I give them tip of my hat right now, is from the Hand Cash guys, was the cash addresses, maybe is what theirs was called, where they had a $sign and then your username. And, there were a couple reasons why this wasn't the best solution. Number one was it wasn't, distributed in any way. It wasn't an open protocol. It was just based by their company. And number two, there was no type of error handling. So, for example, if your handle is Matt Aaron, just the spelling of your name, and I send money to Mataaron, spell it wrong, there's no way for us to get that money back. So, it wasn't a perfect solution, but it was a very clever solution, and they had a great UX win there. Well, as I understand it, this cash account is something similar, but it's going to be native to Bitcoin Cash, and it's actually on a protocol level. And so you can create usernames that look similar to what we see in Discord. So whenever you create a username in Discord, it's something like MattAaron_25255 or something like that. And this is basically the exact same kind of layout as that. So you're going to be able to create cash accounts, which are going to be like usernames, which are going to totally obfuscate away any type of QR codes or any type of cash adders or anything like that. So to me, in the context of identity being a very, very important technology that we want to enable human liberty around, being able to sign in and out of websites using your Bitcoin Cash keys, do authentication, and then being able to create like usernames that are blockchain friendly and at our protocol level are very, very important technologies. So shout out to that. Another very exciting thing is stuff Chris Pacia is working on. So Chris Pacia, who works with OpenBazaar and the BCHD team, is an absolute wizard. Shout out to Chris. So recently they have a full node of Bitcoin Cash, which is written in Golang, which I think is very important because now there is the Copernicus full node, which is by Bitmain, which is also Go. So to me, we want this biodiversity of full nodes, and seeing these guys write full nodes that are not direct clones of the original Satoshi code base is very promising, especially switching from C++ to Go because it's more approachable and more modern. But anyway, so they recently released this Neutrino Wallet with increased privacy. But what I think, this other thing I just saw yesterday, so I'm just coming up to speed on it, seems very important. So they released a bidirectional payment protocol on IPFS, which is the Interplanetary File System. So basically, this has extensible peer identities, encrypted and authenticated connections, protocol multiplexing, stream multiplexing, distributed hash tables, and basically it's like a bidirectional payment similar to the Lightning Network, but in theory it's improved on it in several ways. Again, there's a blog post which is going to do much better justice to me, written by Jamie Redmond over on our news site. But it says applications that could benefit from this type of overlay connection would be peer-to-peer gambling apps, atomic swap protocols, coin mixers, wallet-to-wallet communication, and basic payment channel protocols. So it's sort of just another example of how we're seeing the application level of Bitcoin Cash mature in a way that is going to enable further innovation on top of that. Another huge shout out is to Vin Armani. Cointex is now in 38 countries. So, to me, Vin is one of the most valuable people in our entire ecosystem. They're now in countries where the bulk of people don't even have smartphones. They just have flip phones. So, Vin Armani is not messing around. I suspect that Cointex is going to really accomplish some huge things this year. Another big one is privacy. So, there's multiple different protocols or solutions for privacy on Bitcoin Cash. One of the very promising ones is Cash Shuffle. And then there's another recent one called Consolidated Coin Join. But I believe, having privacy happen for Bitcoin Cash in a big way at scale could be another big paradigm shift for people. And it could be something that sets us apart and does, helps enable human liberty across the planet. And then there's a couple more real quick. I'll just breeze through these. Another very exciting one is OpenSwap by Mark Linderberg from the SLP team. So basically, this is a fork of Electron Cash, which showcases atomic swap functionalities. You'll be able to perform swap between coins like BCH and BTC in a trustless fashion. So from what I understand, this is like Shapeshift, but without a third party. So, these are the kind of applications which sort of show the promise. Now we need to have them built and mature. We also have, obviously, CTOR was enabled on the recent ABC fork, and so that should enable Graphene. Graphene is going to enable block propagation, orders of magnitude more efficient. So that's going to allow us to scale. And then we have, another fork or two coming up in this year where we'll get larger blocks and new opcodes like opmall and op left shift and right shift. And then, of course, what we're doing at Bitcoin.com, we're continuously working on Bitbox, and we're building out a cloud and an app store as well. So, in the land of Bitcoin Cash, I just expect it's going to be an explosion of applications and dApps and tokens and smart contracts that happen in 2019.
Listeners, we'll link to many of those dApps Gabriel mentioned on the show notes at podcast.bitcoin.com. Miko has some exciting predictions for 2019.
Well, I guess the few things that I would predict are that, in the latter half of the year, there does seem to be more institutional liquidity coming into the regulated asset-backed tokens. So, I do think we'll start to see that. There are a few nominal gains in areas like custody to be had with the cryptographic tokens. And I think as soon as the financial infrastructure supports some of these things, we'll start to see more and more kind of adoption. But I think those are kind of really going to provide the stability that the crypto economy is looking for. But, among the asset-backed tokens, there won't be that many so-called moon coins. There won't be that many that go up radically. I think what we'll have seen this year is we'll probably have seen at least one of the major top 10 coins. We'll probably see it kind of failing. I'm not going to say specifically which one because I honestly don't even know, and I'm really just looking at sort of the instability of, some of the experiments that are being tried, and, some of those experiments won't work. So I think we'll see one major one go down. And I would say that we'll have seen what I call green shoots. And green shoots are extremely isolated examples of entities that are producing more lift than drag. Now, I don't know if that's going to lift the entire crypto economy. When you look at green blades of grass popping up in the spring, it signifies the end of winter. It's the end of crypto winter. But it doesn't necessarily denote that the whole market's going to be high flying. The existence of a blade of grass maybe indicates that there's probably other grass that's going to come up soon, which is nice. But I wouldn't read too much into it. And what I'm hoping is that the market will continue to sort of like have upward resistances. And I'm not saying that to be negative. I'm really just saying that, the upward resistances should be, healthy skepticism, because, ultimately we should all peg the value of this to value creation, right? Like if this thing doesn't provide primary value creation, then we shouldn't invest in it. I mean, it's not, otherwise it's just a casino. And one of the things that's taking off right now is betting games. Like, for example, if you look at something like EOS, bet dice, people who are just rolling dice are having a great time. They're, winning and they're losing. And I like to say that it's sort of like a crypto exchange, only without the market manipulation. And so if you look at, gambling and rolling dice, it's providing a similar hit of dopamine. But, obviously that's a very faint primary economic value.
Again, Miko emphasized how important it is to understand how open source software works.
And it's pretty clear that people don't understand open source software. And one of the things that makes me feel bullish is one of the biggest things people don't understand about open source software is that inevitably takes over everything. And, that's one thing that people don't understand that I think is a reason to be bullish.
Finally, Roger surprised me with his prediction.
I hope to be able to tell you that 2019 was the year of more consumer adoption and more people using cryptocurrencies for payments. I have a suspicion, and I'm not super happy about it, but I have a suspicion that 2019 will be the year of the stablecoins. I think we'll see a lot more people using stablecoins, which is really frustrating for me from a philosophical standpoint, because I want to see people using non-government issued money rather than stablecoins. And I want to see the US dollar and the euro and the yen replaced by cryptocurrencies directly rather than tokens pegged to the dollar or the euro or the yen. But it seems pretty clear that the market is headed in that direction at the moment. So maybe it'll be the year of the stablecoins.
So in conclusion, maybe a peer-to-peer decentralized exchange platform will be the big thing of 2019. Gabriel and Roger both see stablecoins as a prominent player in 2019. So for my next question, I wanted to dig a bit more into what the other guests thought. Let's start with Vin's take.
Stablecoins. Will they continue to generate attention, development, and investment in 2019? Or are they just kind of a temporary placeholder for the bear markets? Do you think their role will diminish? Will it grow going forward?
Yeah, I think that actually relates to my previous answer. Once you have a decentralized exchange, there's really not much need for stablecoins. I think stablecoins they're a creation of custodial exchanges. They're casino chips. And so they're a logical progression from having a custodial exchange that is not settling on chain and instead using markers. The unfortunate thing, or maybe it's just, the nature of the beast, is that right now really the only profitable enterprises in the space are exchanges. And so they get a lot of attention. And institutional investors want some de-risking of the product. They want something that feels familiar. And stablecoins really represent that. It's a way to bring in institutional investors, but there are a lot of problems with them. I think that they leave themselves really wide open for regulators to take a chomp at them. So I think that they're a bridge technology, but as we see the custodial exchanges start to sort of lose market share to decentralized exchanges, the stablecoins are going to go away as well.
Miko also had a different take on stablecoins.
My feeling is as follows, right? Which is that I think the phrase stable coins is another kind of Telegram and Twitter-driven monstrosity, much like the phrase centralized exchange, or the phrase decentralized exchange, or the phrase security token, or the phrase utility token. Those are all really bad phrases. I think the phrase stablecoin is a bad phrase. And the reason why I say it's a bad phrase is stability is a property of a coin. And if that's the only property of a given coin, then it's not interesting. And the reason why I say it's not interesting is that you have to kind of understand the utility function it provides. So for example, if you look at like a USDC, or if you look at something like Tether, the utility function it provides is it provides crypto people a way to stay in crypto, but to decrease exposure to volatility, and maybe they can move in and out of crypto while still in crypto, right? So it's a funny utility, but the point I would make is that, will stable coins continue to exist? I think of course they will, but we will think of them more like payment coins. We'll think of them as e-commerce coins, or we'll think of them as kind of baskets of asset-backed securities like mutual funds. We'll think of them differently from the way we think about them today. If you look at the kind of hallmark example, if you look at something like Basecoin, right? Really, Basecoin was attempting to be kind of the stable coin to end all stable coins, right?
Listeners, in case you didn't know, Basecoin raised $130 million with a white paper providing the ultimate stablecoin algorithm that would never break. It had some of the biggest names in venture capital on Wall Street, and they recently returned the money to investors due to fear of regulation problems.
And, my Gumi Cryptos, my fund was an investor alongside a lot of other prominent industry investors, and I think that deal ended up with a pretty favorable outcome, which is north of 90% of funds returned to investors, because there's really no clear kind of regulatory path forward for, not the base coin itself, but the base, the bonds, the float coin rather than the stable coin. So I guess the point I would make is that, stable coin, a coin whose sole purpose it is to be stable, is not interesting. But I think, as soon as you have a coin that is stable, people come up with really novel and interesting ways to use it. Like for example, on my exchange, Evercoin, people are using USDC to move quote unquote in and out of crypto, even though USDC is actually an ERC20. So it's still a crypto. So, in a way, they will be coins that provide utility as a function of stability. But stability is a property of a coin. And the reason why I say it's a property of a coin is that, if you say the coin is stable, it's an automatic misnomer. And the reason why is that, all stable coins are stable until they're not stable, right? So in other words, stability is a property of a coin. It's a little bit like, saying a balanced bike rider, right? So a balanced bike rider is someone who hasn't fallen off their bike yet, right? As soon as they fall off their bike, they're not a balanced bike rider. So the same thing is true of stable coins. Stable coins are stable until they're not. And that's, people shouldn't have illusions about that.
Finally, we talked about security tokens or asset-backed tokens early in the episode. Miko thought it could be a potential $1 trillion market cap in 2019. Basically, putting all assets on the blockchain allows for more liquidity and more access. I wanted to get everyone's take on why security tokens are going to be huge. We'll start with Roger.
a lot of people think security tokens are going to be big. I mean, what's your take on security tokens?
Of course they're going to be big. So is the stock market popular? Of course it is. So all security tokens are putting stocks from the stock market into a token on the blockchain where people can trade it anywhere instead of having to go to a centralized stock market exchange to do it. So of course, this is going to be fantastic and big. And just like you would be careful about what stock you buy on the stock market, be careful with what security tokens you buy. But the SEC needs to get the heck out of the way and allow people to do what they want with their own money and invest it how they want and buy whatever security tokens they want. So yeah, this is going to be huge.
Vin also agrees.
Security tokens are a very simple concept, especially when we're talking about legally compliant security tokens. Basically, instead of a stock certificate or a bond that you would be holding and that would be registered to you, instead, it's a token on a blockchain. So whether that's a token that's running on top of BTC or BCH or something like Ravencoin that sort of has it baked in, or an Ethereum ERC20 or other token, it's a legal representation. It's moving stock certificates onto the blockchain. And so certain states are already trying to get the regulation right. Wyoming, Nevada, and the federal government is looking at it as well. These are actually legal. If you go through the whole process and you do it, which is rather involved, you can issue securities on the blockchain. They're easy to sell. They're easy to track. With Ravencoin, for instance, you can deliver actually messages and dividends. You can broadcast it right out to token holders, which is kind of an awesome innovation as well. I think it's a much easier way of handling equity, especially for those companies that are taking their revenue in cryptocurrency. I think that's the most important thing. If a company is taking its revenue in cryptocurrency, it really makes sense to pay the dividends in that cryptocurrency. So if you can issue your security tokens on the same blockchain in which you are taking your revenue, you really close the loop. It's a fantastic way of doing it, and it's a real efficiency. If you're taking your revenue in fiat, it may not be that advantageous. But I think that for this new breed of companies that's coming up, Cointext is definitely going to be experimenting with this, at least for a portion of the shares that we'll be issuing in our next funding round. So I do think that it's a great option. I think that it's something that is going to really help companies be incentivized to take more of their revenue in cryptocurrency.
Gabriel highlighted the importance of regulation and, security around security tokens. As you can expect, Gabriel went very deep.
Yeah, I mean, again, I am like a huge token advocate. To me, tokens are a 100x multiplier that will really set Bitcoin off. And it's obvious to me that the market wants tokens. I spend a lot of time traveling around the world and going to hackathons, and I see what people build on the ground, and they want tokens. And the reason is because they allow us to take everything that we love about the blockchain and apply them to both digital and real world goods all around us. And it just enables the Internet of Things mapped into the Internet of Money all around us. And it's very, very enabling. So the big problem with security tokens, of course, is where to find in the world you can do them legally. So, like just recently, right after I left Beijing, maybe 3 days later, one of the Chinese ministers, I don't remember the gentleman's name, I'm not super plugged into the political scene there, but somebody who had some type of clout in China announced that anybody holding any secure token offering meetings or even mentioning or talking about secure token offerings would have to leave Beijing. And so, the ICOs are pretty much on lockdown. So the acronym changed to kind of STOs, and it sort of changed the way it's set up, but it's similar in nature, and that's just raising money on the blockchain. To me, I'm a huge advocate of it. As I've said in multiple speeches that I've done, I was at Trulia in 2012 when we had an IPO, and we raised $102 million, but it was very slow and it was very expensive and it was wrapped in red tape, and we went public on the New York Stock Exchange. ICOs are just IPOs at the speed of the web, or STOs, whatever the acronym you want to use. Basically, enabling people to raise money on the blockchain is outrageously disruptive, and you can understand, of course, why different governments around the world will feel threatened by that, because it enables people to raise money to fund ideas at light speed. And so, I think everything will be tokenized. I say that, and I sort of mean that in some super extreme way, that I think we're going to see things tokenize us, which really shock us.
Like what?
I mean, I don't know. Imagine somebody tokenizing. I'm just throwing random things out here. Imagine people tokenizing DNA or individual cells of, biological creatures, or imagine people tokenizing, like space asteroids. Because one of the big things we're going to have an experience about when we get robotics in the mid 2030s is we'll be able to do space mining. So, all around us every day burning up into the atmosphere is just an outrageous amount of precious metals and materials. And today we can't harvest them because our machinery is too crude. But in just 15 years or so, we'll be able to send up swarms of nanobots that'll just be able to pick all this stuff out. So imagine just tokenizing all of these different asteroids as they come into the atmosphere, and then somehow raising money in order to send up robots to mine them, and then giving out equity based on the tokens you hold or something like that.
It's funny when you first said that, I just got to add this. I thought you meant like mining as in Bitcoin mining or proof of work mining, but you're actually mining things from space. That's very interesting.
Yeah, so really just imagine you could tokenize every single atom around you, because you can. There's 2 to the 513 potential HD nodes in Bitcoin Cash land. So in theory, every single one of those could be a token of some type. And you could have, that's 3 orders of magnitude less than all the atoms in the known universe. There's 10 to the 80, I believe, and that's 10 to the 77 or something like that. I believe it's just 3 orders of magnitude less than every single atom in the universe being able to be a Bitcoin Cash token. So like on the super extreme level, you can tokenize everything. And I just suspect that people will.
Tokenize the world. Gabriel has a talk called The Tocambrian Explosion, which we'll link to in the show notes. Miko also put into perspective the world's asset values and the crypto economy eventually swallowing the world economy.
Well, so to me, it's a very simple and logical notion, right? Which is, a token is literally a representation of something, right? And so when you look at this notion of a so-called security token, it's essentially a token that represents a security, right? Makes sense? And so, and so the question is, well, what securities could a token represent? And, what it becomes obvious that there's no limit, right? Like if people are already trading something as a security, then there's no reason why they can't trade that as a security token, right? Which is basically a tokenized security, right? So, this will be the wholesale conversion of, securities, which already exist, and the aggregate value of securities is very, very, very large. And if you look at security, this notion of that, it's really just the crypto economy swallowing the real economy. I mean, to give you an example of value, like everybody is up in arms about like the crypto economy, moving from 200 billion to 100 billion to 50 billion to whatever it may be, right? So, we're talking about like, oh, it's hundreds of billions of dollars, right? I live in Silicon Valley. Like you can climb up the Santa Cruz Mountains and you can look over a city of 1 million people like San Jose. And you look down. And if you look down at a city like San Jose, every single house looks like a dot, right? So, the average house in San Jose is worth $1 million. So every single dot that you're looking at is worth $1 million, right? So now there are thousands of dots, right? If you think about 1 million people, 1 million people living in houses, not everyone has a house and there's multiple people living in some houses, but you're for sure looking at like, so every 1,000 houses you're looking at, that's $1 billion right there, right? So I guess the point I would make is that you're probably looking at $1 trillion, And so the point is the real economy has a lot of value. And the point being that, if we represent and tokenize those things, the tokenized versions will be worth, as long as you have a regulatory framework where there's redeemability or where there's absolute legal ownership rights, then you can start to see the movement of things into tokenization, right? Because if you don't think legal rights matter, then I'm happy to sell you a Brooklyn Bridge token for $1 million. And I can personally tell you that there's only one token that will ever be minted that represents the entire bridge. And, I'm happy to sell it to you for a low price. So to me, like we have to kind of figure out the regulatory legitimacy of the asset. But, I think one of the great things that's happening now in the space is that there are tokens and there are emerging standards for regulatory clarity. And, I think there will be pretty stringent screening processes for these assets.
In summary, yes, security tokens are going to be big, but as Gabriel and Nikko emphasized, be very careful. The token must legally represent ownership of the asset. And think about the risk of hacking and real-world risk. For example, what if I own tokens for a dividend-paying company and all of a sudden they get hacked? Will I be able to get them back? Or what if the protocol that holds the tokens is hacked? And in the real world, if I own a few tokens that are a percentage ownership of a Picasso painting, but the painting gets stolen or damaged, or it was a fake painting, well then I really don't own anything. In conclusion, remember Amara's law. We tend to overestimate the value of a new technology in the short run and underestimate the impact of a new technology in the long run. Making exact, precise predictions are difficult, but there's no doubt that 2019 will be an exciting year. I'd like to touch on one idea that was hinted but never mentioned. We are social and emotional animals. We have our lizard and monkey brain, our prefrontal cortex, as Miko commented on with investing and trading. And yes, I do believe in general, better technologies can eventually win out. But the resistance, hatred, and Bitcoin phobia is real. Many examples. You've seen it with the comments from Jamie Dimon, American Express paying for FUD or fear, uncertainty, and doubt ads about global warming on Twitter, studies that talk about Bitcoin only being a source for money laundering, and the propaganda will continue because Bitcoin is a threat to many existing financial and government powers. It's a threat to economists and financial gurus because it can validate their work and their influence. It can be as simple as jealousy on lost attention. I mention all this because you've heard people talk about religious fervor and the mass movement of Bitcoin and crypto. I believe you need to rally people behind a cause and appeal to emotions in order to get mass adoption. Look at politics. Logic alone, although it may help sometimes, aka save money on Amazon with Purse.io, isn't enough. Feel free to disagree with me here, but I believe that you do need true believers who are obsessed with Bitcoin to push this thing forward. The seminal psychological text from 1953, The True Believer, The Psychology of Mass Movements, written by Eric Hoffer, talks about what makes mass movements successful. It goes into the unbridled enthusiasm or zest and religious-like belief to affect change. While there are many differences between movements like Christianity, communism, from Bitcoin, there are some key principles of a revolutionary movement. I highly recommend the book and will leave you with a few quotes that stood out to me and will apply them in the context of the Bitcoin financial revolution. First, on the power of Bitcoin, the first Bitcoin transaction for less than a penny, or the idea of remittance payments to Mexico instantly with no middlemen. Quote, "It is a truism that many who join a rising revolutionary movement are attracted by the prospect of sudden and spectacular change in their conditions of life." And, quote, "It is not actual suffering, but the taste of better things which excites people to revolt." Most of us listening have seen the power of cryptocurrency firsthand. On the relationship between fear, faith, and freedom. Quote, "Fear of the future causes us to lean against and cling to the present, while faith in the future renders us receptive to change." I strongly believe that what I love so much about Bitcoin is the faith in the future and peer-to-peer, human interaction that it stirs up inside of you and that potential future that is there, that is possible. That's really powerful for a lot of people involved. But remember, freedom aggravates at least as much as it alleviates frustration. Freedom of choice places the whole blame of failure on the shoulders of the individual. And a final quote on freedom is around equality. Where freedom is real, equality is the passion of the masses. Where equality is real, freedom is the passion of a small minority. Equality without freedom creates a more stable social pattern than freedom without equality. Now, when it comes to the big banks and government control over money, I really like this quote. Quote, "Mass movements can rise and spread without belief in a God, but never without belief in a devil." Think about the 2008 financial crisis and just ongoing manipulation and corruption from large banks around the world. On the anti-Bitcoin propaganda. Quote, "Propaganda thus serves more to justify ourselves than to convince others. And the more reason we have to feel guilty, the more fervent our propaganda." All right, so again, that book is called The True Believer. Check it out. Thanks so much for listening to this show. Tune into the Bitcoin.com podcast network for more updates and insight. We are wishing everyone a prosperous 2019. It's been an amazing year. over 130 episodes on the network with guests from all over the world. This is Matt Aaron, and you're listening to This Week in Bitcoin. If you got value from this show, please subscribe, share, review. It's greatly appreciated. I also want to thank everyone that make the Bitcoin.com podcast network possible. First off is Isabel Chaparro. She is the editor that makes us all sound, myself and the guests included, more profound than we really are. She works so hard on it and really appreciate her work. We also have current and former host Blake Moore, Sierra Kelso, Nick Cottonero, and Stuart James. Thanks so much to Kai Sedgwick, who writes for news.bitcoin.com, that all of the news, short form news episodes, he curates the content for all of them. Amazing job, Kai. We've done over 50 episodes together. Special shout out to Gerald Fabro and Emily Rose DeLaura for all your help on getting guests and marketing the podcast. And thank you so much, Mate and Roger from Bitcoin.com and the whole Bitcoin.com team. All right. Well, Happy New Year. And again, tune in to the Bitcoin.com podcast network. More education and entertainment for Bitcoin adoption in 2019.
Thanks for listening to the Bitcoin.com podcast network. To learn more about our shows, visit bitcoin.com/podcast. Bitcoin.com Podcast Network.